post-mortem of my interpretation of how the market was set up at the time when Tom Howard went short today. Of course, this is all after the fact. I'm fully aware, but how I do my analysis on a day-to-day basis on top of real time, it's the same regardless of whether it's after the fact or not. So how I conduct real time analysis is exactly how I do it past charts, as if basically in essence emulating real time market conditions. So just gonna put there we go. So what I aim to do here is just assess how the market was set up at the time of when Tom went short today based on the brunch break bar. But through my lens of how I would have played today on the DAX. Remember, this is all would have, you know, but I was just intrigued because I was looking at his Telegram and I like to, even though I do not trade whatsoever like Tom, uh, I don't. I just don't. I don't gel with that way of trading. I tried for a while to trade like the statistically quantitative style where you've got a specific set of criteria that's extensively researched through past charts to determine how, when previously participants traded in the particular fashion, that facilitated the market moving in a particular distinct way. Um, where in those circumstances that of them trading in that way, it's displayed as a particular price movement formation on the chart. In those circumstances, then researching extensively how subsequent participants then tend to trade like under those circumstances of traders beforehand, trading in that way. So I'm aware of all of how that works, but it did not work for me. Of course, if I stuck with it for long enough, I probably could have, but yeah, I trade purely flow based of how the market set up each given day, and I just focus on euro and pound, and yeah. So as I had um shown in my past video of doing the outlook of this morning real time, literally I just done my analysis and then I recorded it and put it on YouTube too. That analysis is exactly what I would do off YouTube and what I do every single day. And what I was waiting for was a nice 1 hour bar close, as I outlined in advance in this region. We never got that, and then so you just stay out because I only trade from 7 till 10 or 3 to 5/6 p.m. UK time. And then Euro, I was looking for the same thing, but nothing formed. But anyway, I'm aware that this video was not to do with the euro. Anyway, so at the time when Tom went short today, obviously he trades basically the same hours as me. He trades from about 8 to 10, and I just want to cover how the market was set up through my interpretation at the time when he went short. As I've said, probably about 10 times now. I'm aware. So it will start on the daily. We'll see that the current at hand push and play was from this low. Remember, this is all based on my experience and my opinion, right? So it's not this and it's nothing. And I'm not saying it's like, okay, well, it's like whatever I say is the right way, is the right thing. No. So anyway, so this is the at hand push that's currently in play, and then this would obviously be the previous at hand push. Now, as we see, the previous at hand push's range, aka the high and low, was fully closed in by this at hand push, and then it kept extending to the upside. But first of all, we see that the current at hand push in play initially was pushing quite impulsively to the upside, and then the angle diminished, right? And it's comprised of a healthy candle quantity above previous arm push ranges high, which is also the key high for the daily too from this point, because you had initial high put in, you had two subsequent bars after the initial high put in close. One of them was opposing to the primary direction the market was pushing in, aka bearish. And then as of this bar close, aka from this open, this was a valid key high. And then the key low would be this, because this was the prior range. It was broke from this high to the point it was broke. Where's the lowest point traded? It's right here. Pushes up, and then it formed a new valid key high, hashtag type 0/1, which is just like a freshly formed key pivot high, where like you get a high and then 2 subsequent bar closes form from that high that's placed in, and then validating that high. Then if it's broke past, then you've got a KI kilo range pivot break. So I'm aware that I'm using, as I literally put in my prior video, fancy lingo, but like it just helps me discern what I'm referring to better. So it's not like I'm not trying to come across like some wizard. It's just how I do it. So anyway, yeah, you see the market pushed above the previous closed in the entirety of the previous range and traded above the previous range's high, with a healthy candle quantity push to the upside, and the candle quantity the price coverage per each bar was sufficient too, and then the angle diminished. And then as of the most recent bar close prior to the given day that we would be operating within, how did it close like amongst the existing structure of the current hand push and play, and where is the structure of the hand push and play's range in regards of the where it spans over? How does that fit into context with the previous range of structure? We see it's extended right above the high of the previous range, and it's also closed it in with a very sufficient counter quantity. So it's overextended. So then what you could do, or what I'd like to do too, is mark up the at-hand pushes range relative to the time frame chart perspective being analyzed range with a fib. I like to fib it up, and it just helps us gauge like, okay, well, where are we trading within the range? Of course, you can eyeball it, but I also like to have it on my chart too, just so I'm even more aware of like the actual range itself and what makes up comprises the range. But like we see that like as the market's traded above here, we're basically gauging when a reaction's likely to unfold, right? So if we just ignore all of these bars and we just focus on them on the data that's available and relevant to today, or what would have been relevant, and it still is relevant to today, to be facts, to be fair, because this'll because the I'll get to the point, but from as of how the market was set up as of this bar close, it was like it's based on that. It is likely that the subsequent bar in plays primary direction that the market pushes in is to the downside. So therefore, over the subsequent 24 or however long the subsequent daily bar unfolds over, the primary direction that the market's likely to push in is to the downside. So, but obviously we clarify that by looking at next step lower time frames. Now for the DAX, I would just consider I consider the 3 month, the monthly, 2 week, weekly, 3 day, 2 day, daily, and then I go straight to the 8 hour. I don't like the 12 hour, and I'll show you exactly what I mean. But to not digress too much from what I was about to say about of how the market is set up now and how I'm coveraging, I don't know what the word would be, how I'm covering like how the market's set up now is still relevant now for over the initial hours in New York, aka like 2:30 UK time to probably about 4 to 5 ish. And then after that, the daily bar relative to DAX has probably played out most of its range, and then you kind of want to be a bit careful. But to then go back to why I was saying about I don't use the 12 hour, the 9 hour, is because of this. Because you get a 12-hour bar close at 7, and then this bar is only open for like a few hours. So I just go straight to the 8, which this bar closes at like this bar closes at 3, and then this bar is open till the subsequent day's morning open. Regular trading hours too, not extended. So, and for the DAX, I like to use RTH, particularly for the reason that I like to use the top-down time frame analysis, seeing like how the at-hand push relative to each time frame chart perspective is structured, the angle the push is pushing in, and where the most recent bar closed formed the way it did amongst the existing structure of the at-hand push's range, and then how that overall structured setup state of the at-hand push being analysed relative to the time frame chart perspective being referred to compares to the previous range of the previous at-hand push that was in play, structured high and low. and then like where amongst that previous range of structure is the current push that's in play, set up the way it is. So, it's the same for every single time frame. So it would if I so that's why I do that. So anyway, if we go to the daily, I'll cut all the talk, and I'll just simply cover it how it was set up. So as we see from the most recent bar close prior to the subsequent bar that we'll be covering, Tuesday's European morning trading session, run from 7 to 10 by my I don't want to say opinion, because it's got nothing to do with that. It's just the times I've chose to trade. Okay, so as of how the market, as of how the hand push was set up and structured, the subsequent bar that was in play was likely to primarily push to the downside. So, and we also see that it is likely that a reaction takes place based on how the angle the push was pushing in diminished, and then you got some toppy out structure right at the highs of an already well structured push, and then the way this previous bar closed prior to the subsequent relevant in play bar covering the today plays out. This bar was set up quite nice to keep pushing lower, but obviously we clarify that by how next step lower time frames are set up. And I'm fully aware I'm rambling a bit, and I probably could have made this a bit better, but it's the first time I'm doing something like this, so I'll get better with it, and I'll learn to differentiate when I'm maybe saying too much. But anyway, we'll mark up the key high key low range pivots. Most of the time, the key high key low range pivots, as I call them, fall into the at hand pushes range pivots, like high and lows. Anyway, but sometimes they don't. But anyway, like for example, like right here, you got an at hand push, and then you kind of got a shorter term at hand push, and then you got this. Whereas this would still be a key high, and then your key low would be here. So like you'd be marking up just like the at hand push range high lows, whereas that and this would be a key high key low range pivot. So it's just simple little things. Anyway, we see that at the overall 8 hour at hand push to the upside from like this low to this high, we're sat right at the very highs. It's a well structured overall at hand push to the upside, and then we're kind of sat right at the topped out region, which is also above the overall key high kilo range pivot high previously. The previous one, the second last one. Now, the last 8 hour key high was this, and so this was the at hand the 8 hour at hand push technically that was in play as of the open of today's bar, 8:87 in the morning. So this was the range, right? So and then this was the at hand push that was in play, right? So this was, hang on. So one sec. So this is the at hand push, and then this is the previous at hand push's range that was in play. And then this, from this low to this high, is the overall. And then this is the second last key high, and this is the last key high that was traded past. Now, as of the most recent bar close prior to the window we looked to trade, the most of this range, the previous at hand push range was closed in. So I want to be a bit iffy with that. Yes, we're sat right at the high still, and based on the way the daily bar closed, like it's likely to still keep pushing lower, and this holds less significance at that we are in the extreme region of the previous ranges at hand push. But we still have to acknowledge it and tread carefully. 7 hour, basically same thing. Bit of a iffy close based on of where the market is situated relative to the previous at hand push's range. But this at hand push isn't that sufficiently structured. And then also, whilst this at hand push is set up the way it is, the subsequent daily bar that is to unravel is set up to primarily push to the downside based on how that relative time from chart perspective, it's at hand push is set up relative to the previous at hand push's range, being a sufficient candle quantity and quality pushed to the upside, closed in the entirety of the previous arm pushes range and above the previous arm pushes range high, and it was set up nice for a reaction to potentially take hold relative to the daily. So relative to the 4 hour, you've so I would classify this as the whole at-hand push to the upside, and then we're kind of closing in the entirety of this at-hand push range, previous at-hand pushes range, with a decent candle quantity push to the downside. But based on how the daily setup, it's still likely to primarily push lower, and also where the market is situated amongst like the 8 hour relative overall push to the upside, sat right at the highs. But this at-hand push doesn't look that good to short now that I look at it, because I mean we're sat right at the very lows. We're closed in the entirety pretty much of this range, and sat in the extreme region with wick rejecting. So it actually is a bit iffy, to be fair, now that I look. So the 3 hour, does that bar close at 7? Yeah. So then this, it looks quite iffy, to be fair. We're sat right at the very lows. Again, very iffy, sat right at the very lows. You wouldn't want to long based on how the daily set up, and then also how, like, yeah, 8 hour is kind of overstretched to the downside, but you don't really want to sell a market such as that. So especially when it's set up that way, whilst you got the daily set up to primarily push to the downside over the in-play bar, subsequent in-play bar. So, and then 1 hour. Yeah, to be fair, this is why I just don't like trading these, because I just can't really trade them. I can't really read them that well. But to be fair, if I just go back to the 8 hour. So I could easily kid myself and be like, oh yeah, I'd go short here, I'd do this and all that. But I don't like to do that, because what is the point? Like, there is no point. It's better to just be real. So to be fair, with this push set up the way it is, it still looks like it's going to keep pushing, especially when you've got the daily set up the way it is. So to be fair, I wouldn't have took this, because I openly admit I wouldn't have took this, but if I was to look for a setup, it would be something like this. So I would first discern the hand push 1 hour to the downside as range, so this high to this low, and I'd wait for a nice 1 hour bar close at this region. You do. Yeah, it's not a nice one, but you know it's sufficient for a rejection. You know, you kind of got an iffy bar close. It's not really dominant at the downside, but it's also wick rejecting the highs, and then you could drop down on the next bar, which would be 9, which is here. So you'd be active from this bar open. So you would just have this data at your disposal, and that isn't sufficient bar close. Neither's that. This is a beautiful one. So that's a sufficient anatomical bar close. I'm aware of how ridiculous that name is, but that's just what helps me differentiate between hang on. Oops. It's just what helps me differentiate between like certain types of bars, and know exactly, like when I say an anatomical bar close or anatomic bar close, I know exactly what I'm referring to. So although it might sound ridiculous, which that is true, it helps me discern what I'm referring to. I'm just, yeah, whatever. Yeah, I'll just sort this out real quick. 20, and then we'll go 28. Okay, so yeah, and then my stop loss, I would do the price that it's trading at. So it closed at 1961. So I would do 1966 divided by 1,000. So my go-to stop loss would be 19.6, and I'd line that up, and I'd see how that looked compared to how the market had auctioned. I'm definitely not doing that, so I'm immediately resorting to probably going for about 4 times that, so about 78. And then remember, we've got the daily bar closed in my favor too to primarily push the downside. And then this also like covers some of this previous day, previous day's range. So it also covers this high, and then it covers quite sufficiently into this like zone of like choppiness, like distinct involvement, really, where like it ranged, and then participants then decided to have enough and decided to agree upon the prices that the market was trading at in the fashion that facilitated this move, which if they traded it back to the region of the same prices, they may be willing to do the same thing under the same circumstances of the market being situated at the same prices. And then yeah, I would just be going for a 1-to-1 risk to reward ratio. I know Tom doesn't like them, but I do. So and then you've got a sufficient playable range. I should also have mentioned. So like as of the 1-hour nice bar close, when you drop down on the open of the subsequent bar, like you must have a nice playable range, which yeah, there is a nice playable range. So that would be it. What I would mark up, and yeah, and then this bar closed nice amongst the playable range. It didn't like close like here, like for example this bar. We wouldn't be if none of these bars closed nicely. We would, and then this bar was the only one that did. We've pretty much closed in the entirety. So it's like once the market gets to like maybe let's say uh, it depends also the context of how the higher time frames are set up too. It's like if the market came down here and formed a very nice bar close, like even here, obviously there, and then the higher time frames were set up very bearish, then yeah, I would take it. But if they were set up a bit iffy, then no, I probably wouldn't, and I'd like to be a bit more preservative. So that's what I mean about flow. I'm not limited to like, for example, Tom, which is nothing wrong with it. He literally like totally making it work. He's short on uh, the the 930 bar high or low, regardless of whether the market's set up. In this case, bearish, he would be long in the high if it market was traded above a certain point amount. Um, but yeah, this is nothing to do with like a specific bar situational analysis of like for example when the market is traded below the 930 bar lower high. This is complete flow approach, so you flow with the market. You're not imposing what you want to see, but that's just by my terms. But yeah, so that's how I would have traded it this morning if I was going to, but not going to lie, I do not have conviction or the strong enough conviction to trade the DAX. Like the euro and pound, I've got no idea why or how I gel with it so well, but I do. But yeah, I wouldn't want to look at any other markets really. To be fair, either. I like it, like to actually trade, so two is enough. So yeah, that's my interpretation of Tom's trade today, of how the market was set up through my lens, and I will also do one real time too, just so it doesn't come across like I'm one of those, as he would say, charlatans, like after the fact trader type people. Nah, I mean you can see by my channel I'm not that. So of my existing videos. So yeah, that's it for this, and I'll probably do more of this. So I will definitely do another one that's real time of the DAX too, and it won't be this long either. I'll make it short.